Hi there. In this video, we will continue talking about the fraud examiner himself. And just to make a quick recap on what we discussed in the previous video, that we said all the prior chapters we covered so far in this course talks about the process of fraud examination. But now, how about the fraud examiner himself? If he came into an ethical dilemma and he doesn't know where to go, all the outcomes have negative impact, and the clear outcome that might have a positive impact is not clear. And then we said in this situation, the forensic accountant or the fraud examiner first has to look at the law, because if any of the approaches he's going to take in his examination is against the law, it will become illegal and it will destroy his future. But if the law is approving his approach, and this is the minimum threshold, then he has to take one of the three approaches. The first one, which we call it unilateral, weighing the good and the bad things, and try to take the approach that might have better outcome than the bad outcomes. The other one, imperative approach. The imperative is follow the law literally, regardless of the consequences. And this is the minimum. We expect the fraud examiner to have more experience in making a better decision and not relying only on them. The third one, we call it generalized approach, which means that the forensic accountant should not take any bad approach, if we could say, unless there is a good reason for them. So we say it's not easy to take a decision that has ethical issues. Which way he should examine, how he can run the interview, how he can comply with the law without any restrictions in his scope of work. Then we say there are some organizations that might be helpful to the fraud examiner to give him advice. One of them I mentioned in the previous video is the ACFE, the Association of Certified Fraud Examiner. This association is one among several associations like AICPA, it's another association, PCAOB, it's another association, AISACA is another association. Those associations, they have standards, interpretations, guidelines, hotline support that can help the examiner to raise up the issue with the professionals in the field and get some advice from them. And now we will turn or shift the gear into the organization the fraud examiner is going to work for. And we need to look at the board of directors at the highest level, and then cascade it into the executive management, the employees, the internal audit department, and what are the roles that they should play to deter the fraud, prevent the fraud, and if it happens, detect the fraud, and what the fraud examiner should do in this context. So with this in mind, let us jump into the presentation and see. First of all, the board of directors in any organization, including the company the fraud examiner is going to investigate, they are responsible for the executive management. So the board of directors, usually they hire the executive management, especially the CFO and the CEO, and they are responsible to make audit committees. So the audit committee members, it's derived from the board of directors. And the audit committee will be in charge of establishing the internal audit department and making an agreement with the external auditor to come and run the audit on an annual basis. The audit committee also will set up the fees for the external auditor and receive the report from the external auditor. And this is what is mentioned here. So the audit committee mainly is in charge of the audit, whether from inside or outside. The board of directors also is responsible to establish the internal control over financial reporting, where they use the framework that we discussed in previous classes called COSO framework. The committee of a sponsoring organization, they set up internal control. The board of directors should embrace this framework and try to see how it can be applied into the company to make sure the financial statements are coming through rigorous review and all the data in the financial statements are correct and reliable. The third one, the board of directors will assure that the management has assessed the risk and try to make the precautions to avoid any collusion or override that might happen to the system. In this context, the board of directors should make policy, and the executive management should be aware of this policy, share it with the employees, and make it clear that any fraudulent transaction is not accepted in the company. And if it's discovered, it will go through a series of procedures, discipline, and might end up with financial penalty or criminal penalty. And this way we call it tone at the top, where the board of directors and the executive management, they put the tone at the top managerial ladder that any fraudulent transactions is not accepted. They make code of conduct as an anti-fraud program. They make regular training for all the employees in form of online or in-person courses, where employees, they have to go through this material every year to become updated of the new terms in the code of conduct and the policies. And they make it clear to the employee they have zero tolerance policy toward fraud. And if something happened, the board of directors should ensure the protection of the person who report any incident, which we call him whistleblower. The board of directors should secure complete protection to the person who is reporting and investigate it immediately. The managerial team or the executive management team, they actually communicate the compliance with company's policy with all the employees, and they reinforce what has been initiated by the board of directors. It means they don't accept any fraudulent transaction, and if something happened, it will be handled quickly and decisively to put an example for the rest of the employees that nothing will be accepted when it comes to the area of fraud. And whistleblowers will be completely protected, yes. The internal auditor, it's actually assigned by the audit committee and reporting to the audit committee. Why? To become away from any pressure that comes from the executive management. The internal auditor, it's a separate department that try to assess the risk that might happen in the operation or the reporting or the compliance with rules and regulations. And they make sure that there is enough controls happening to reduce this risk and enforce the corporate governance structure through the company. They are similar to the external auditor, but they don't go into the financial reporting per se. They are into the operation and the external auditor into the financial reporting. Now we cascade it down into the accounting department. So we started by the board, and then we go to the executive management, then the internal audit department, then the accounting staff or personnel. They should be trained, motivated, and they have big or good compliance with all the rules and regulations, and they are familiar with the anti-fraud efforts. The accounting departments also contribute to the tax compliance, make sure they report the tax properly, and they file the payroll for income tax on a regular basis. The human resources, on the other hand, they make sure that they hire, train, promote, and fire the people as it should be according to the policy of the company. So they implement the proper policy regarding checking the background and the reference when they hire the person. And when the person joins the company, they make sure this person has good training for the compliance with rules and regulations and anti-fraud to discover any fraud. And on a regular basis, they make evaluation for promotion and retention And finally, if there is any kind of dismissal, they make exit interviews. So the human resource is like what you say, the backbone to bring the right people, retain the right people, and fire the people if they misbehave. Unanimous communication, and these are the best practices for reporting the compliance issue. It's perceived by employee, and this is very good because if one employee discover any incident, the employee will feel comfortable to hide his identity and report the issue to the executive management or the internal audit department. This will be available to employees, vendors, customers, in brief, all the stakeholders. Availability of reporting mechanism must be communicated and widely known. And most probably the big companies, they have hotlines to make it easy and fast for the person to report any incident. And they open to any type of inappropriate behavior. So this can open the door for the people to report it and feel secure about their future, that they will not be penalized for reporting. Participants of allegations must be properly trained. So those who receive all this kind of phone calls, they should be trained to analyze the phone call, identify the red flag, the suspect person, the timing, the whole situation of the incident itself. The recipient of allegations must take the allegations seriously and vet them thoroughly. So here, no matter how much is the phone call, either in time or value, the people has to take it seriously. Examine the allegations to protect the privacy and the right of the accused person, because maybe the allegations came by the whistleblower about a certain individual who's completely innocent. So we have to investigate the reporting carefully and make sure we protect the reporter and make sure that we keep the privacy of the accused person until we validate the accusation. Policies and conduct must ensure no retaliation is taken against the whistleblower. It means his identity is hidden, his future is secured in the company. Properly motivated and task-aligned employees and staff help create a strong control, and this happens usually by the HR. If the HR hires the right people and train them, most probably those employees will create the conducive environment for good internal control and minimizing the fraudulent transaction. The role of legal and compliance is to ensure that the organization is conducting business to meet the external requirement. And this is the key point, that the company is a citizen in the community that should deliver their production or their services in a good way. And the point here that we should make sure that this company is in compliance with all the rules and regulations. And this will enhance the company's reputation and educate the personnel about the compliance, legal, regulatory, and other issues. So remember here, the compliance of the company with rules and regulations will reflect the real identity of the company in the community. The key points here for managing the risk of fraud: number one, commitment to compliance and anti-fraudulent environment. Good example to show this commitment, number one, is to create a good code of conduct. Number two, educate all the employees. Number three, take an action when the fraudulent happen. Number four, for those who are at the executive level, it's better to become members in different organizations to become updated with what's going on in fraud world and how this can affect their company. This is what we mean by commitment to compliance. Number two, if any risk has been found, we should assess the level of risk, whether low or moderate or high, and train the different employees in that area to work against the risk and minimize the risk, and then communicate the efforts. The organizational ladder and stakeholder acknowledge and affirm their commitment to compliance, and this is it's manifested by signing on the code of conduct that they have read it, they understood it, they are able to practice. And if there is any conflicts of interest happen, the people, they must disclose it in writing and to the higher manager to make sure that there is no conflicts of interest between the company's benefit and the personal benefit of the individuals. Systematically complete the compliance and fraud risk assessment. Usually once a year we do that. Establish reporting procedure in case there is allegations happen. So the whistleblower will report it and the company will take an action to investigate it and protect the identity of the whistleblower. Documented protocol for handling reported allegations. And finally, we make kind of remediation if it's not that severe, and we can resolve the issue internally inside the company. It's always better, by the way, to resolve the fraud, better than taking the whole case into the court, and then it becomes really a long process of getting some resolution for that. Program evaluation and improvement activities. So we try to evaluate the program to make sure there is no loopholes on the system, and the system is good enough to assess the risk and hopefully deter the fraud before it happens. An iterative feedback loop to ensure continuous monitoring and improvement. What will happen after we discover the fraud? After we discover the fraud, number one, we should collect evidence. So whenever we hear any red flags, we try to make evidence collection and interview or some kind of deposition. We protect access to computerized information, so we make sure that the data set are not compromised. Train a specialist to make sure that not everyone can jump into the crime scene, hang up the computer or shut down the computer, because this might trigger any virus or pump that might destroy the whole system. Consult with human resources all the time whenever the fraud incident is discovered. And if this is a big case, it's better to get some consultation from the attorney of the company to make sure that we don't violate any law during our investigation. Here, react to early warning signs, the red flags. If we find mismatch in the accounting number, this might be like a hint for fraudulent case. If there is any weak internal control system and there is no segregation of duties, no reporting, no some kind of documentation processing, so everything is loose, this will be a good sign for a fraudulent transaction to happen. Analytical anomalies, if we match the financial ratios with the non-financial data and we find mismatch in this analysis, this will be a sign for a fraudulent habit. Lifestyle symptoms, where we find people with low salary, they are living a very luxurious life. We say, how could their lifestyle match with their income? A behavior system, if we feel people are intimidating the other people in the organization, or people they are making lobbying in the organization, this might be a sign for fraud. Receipt of tips from potential informants like whistleblowers, this might be a sign for a fraud to exist. How can we prevent the fraud? As I said, number one, segregate the duties. I cannot control the pressure inside the person and the need for money. And I cannot control the justification and rationalization the person has in his mind. But I can control the opportunities and make sure that I have good control. So in case the person has pressure and justification to commit fraud, he will not be able to do it because there is a good control system. So number one, segregation of duties, starting from initializing the transactions, going to the approval of the transactions, recording the transactions in the accounting records, and putting the transactions in the warehouse or the product in the warehouse and safeguarding the asset in the warehouse. all these jobs should be made by different individuals. If I give all these jobs to one individual, he can commit the fraud and make a cover-up and nobody will find it out. So this is what we mean by fraud prevention. Process control are consistent with the notions of difference. So we make reconciliation between the accounting books and the bank statement. We can make independent review where the person comes unexpectedly to make a checkup on the record and on the warehouse item, and this would be a good sign, make approval and sign off. Physical inspection, where the people go literally with their eye and count items, either fixed assets or inventory or receipts or checks, and this would be a good sign to check that the item is existent. We make analysis, and this one, the analytical procedures, we do it to develop some expectation and see the relationship between what's happening on the records and what's happening in real life, like in similar companies, and then we will be able to discover any anomalies. So for example, if the company is an airline and they make 15–20% profit for the last 2–3 years, meanwhile, the similar airline companies, they are making 25% over the last 3–4 years. When we match the record with the average industry, we will be able to discover any anomalies here. And finally, we make external audit periodically, once a year, and we make internal audit where we go and check the different departments by surprise. We don't tell them. So in case there is a fraudulent signs, we will be able to discover it without any coverage from the department. So this is in brief the role of each player in the corporate governance of the company and the fraud examiner. We start by the board, we go down to the executive management, to the internal audit, to the accounting department, to the HR, and then the fraud examiner comes to check all of them and make sure there is a good control system that can minimize the risk, reduce the fraud, and if it happens, we'll be able to discover. I hope you find this video useful, and I hope you enjoy reading the chapter from the textbook. Take care. Bye-bye.